I saw what communism looked like. And then because of work, I went to America. I saw what capitalism looked like. And then I came to Hong Kong, and that was capitalism unchecked. If you had money, you had power. It was a completely free and fair and open market, you could say, but also no social security, right? It was like the extreme side of capitalism. So I saw all these things, and I wouldn't know until much later in my life that it had an impact on me, right? The reason why I'm so drawn to Web3 and to blockchain technology is because I'm a capitalist. So I believe in that.
Hey guys, welcome to VNTR Podcast, and today we are hosting Yat Siu, co-founder at Animoca Brands. Welcome, Yat. Great to see you again. It was amazing to host you at our forum in Dubai. And today we met in order to learn more about Animoca Brands, how you guys invest, and maybe you can start with a quick introduction to Animoca, and also we would love to learn about your background.
Sure. So thank you for having us on your program. It's good to see you again. It's always a pleasure. So very quickly, Animoca Brands really started its journey in the Web3 space with CryptoKitties back with, actually we were pioneers with NFTs and, Metaverse and gaming. And while gaming is, of course, still a big part of what we do, actually Animoca has grown quite a bit, right? Today we have over 573 portfolio companies. We have a multi-billion-dollar asset base, both for projects that we have launched, like Sandbox or Mochaverse or Open Campus, but also all the portfolio companies that we've invested in, such as Pudgy Penguins or ApeCoin or Yuga Labs or Polygon or like Immutable, or like a whole range of companies that we've been investing in. And the way that you can think of us is really as a Web3 operator with very distinct asset strategies. As in, we think of Web3, our mission is to deliver digital property rights. And so when we say digital property rights, what do we mean? We mean it's this kind of property that we can now virtually own, starting with your Bitcoin. And from there on, new opportunities can develop. And what we want to be is essentially the platform and the network and essentially the agent in some cases to help you get there, right? So that means, whether it's things like Sandbox or Mochaverse that helps onboard people onto Web3 from Web2, or whether it's things like student loans that we do with Open Campus, or whether it's just investing broadly in the ecosystem to help basically bring more people on chain. That's kind of the mission of Animoca Brands. And some people have described us, and it's not one that we came up with, but some people have described us as, are we the MicroStrategy of altcoins? So, right, and it's an interesting example. Of course, we don't just hodl; we create yield, right? And that's actually what's possible with altcoin, because with Bitcoin you can generate yield, but it's not natural yield, right? Because Bitcoin doesn't have its own yield. You use it as collateral, and then you trade it and do that kind of stuff. So there's still some element of risk. Whereas if you do altcoin strategies, I think the whole strategy and structure around it is very inherent, just because altcoins are essentially, financial in nature, you could say, because of the fact that, the tokenization gives it a capital value, right? And so we have therefore distinct businesses around this, right? So we have the investment business, we have our operating businesses, and then we have our trading business, and we have our market making business, and we have our advisory business. And then of course we have a stablecoin business as well with Standard Chartered. So it's quite expansive. Last year our revenue was about $314 million, with about $100 million EBITDA, close to that. And we're about 1,000 people worldwide. So I would say that Animoca Brands today is probably the largest non-exchange, non-hedge fund, non-market maker type company in Web3, right? And I think it's interesting, maybe just to point one thing out also. The reason why I think we have a unique position is for two reasons. One, I think, is because the US has previously had a very hostile regulatory regime. We don't really have a US competitor yet. That's kind of interesting, right? But that's because the US basically didn't allow it, right? And then the other market where usually technology companies are really big is China. So, we're based in Hong Kong, but actually building a crypto native business in China isn't really possible, right? Even though many of them have started. So it's interesting. So you see the innovations in the space come in places like, whether it's in Hong Kong or in Vietnam or in Philippines or in Middle East and Dubai and those places, right? It's not typically been very US and China centric, even though the founders of those companies might be Chinese or might be American. but they're not domiciled there in the past, right? So this will change obviously with the Trump administration, but it's kind of interesting to be in that situation. So for now, I think we're the largest sort of in that space. We don't expect it to be this case all the time. It's just an interesting situation to be in, I think.
So can we step back to the beginning? It's kind of how did you get started with this venture, right? Kind of what is your background? Did you imagine that you would be building such a big company when you started?
So I never imagined that I would build a big company because the mission for me wasn't about building the company. The mission was the mission, as in, try. And there's a motto that we live by that we sort of live with impact and purpose. So which means that I want to live a life where I do something I think is important and it has an impact on many people. And now, of course, how big an impact, you don't know, right? But at least that's the goal. I actually started my career in the 80s. So I'm a little older than probably a lot of your audience, I'm guessing. All right. My first job was actually with Atari in the 80s. And they were obviously one of the first big video game companies. But I was working on the Atari ST, really doing sort of actually originally sort of multimedia, as in sort of music related stuff. And I grew up in Vienna as well. And I think that has also an impact because when I grew up in Austria in the 70s and 80s, for most of the audience probably might not realize, because a lot of people in crypto tend to be a little younger, is that was a time when Europe was still East and West. Okay, right? And the Eastern bloc of Europe was basically truly communist, right? Like today, I mean, even China is not communist. Like it's not communist at all, right? But the idea of what communism was truly communist, essentially during the time of those sort of Eastern Bloc countries, as we used to call them. And my mom was a musician, and she used to work at the Komische Oper in Berlin. And so I would travel from Vienna, which was basically socially democratic, more capitalist, but essentially democratic. And then I would visit her in the eastern side of Berlin, and I would see what that was like. And I think this experience, it's not about just my technology background. It's the fact that I lived in a time where I saw what social democracy looks like. I saw what communism looked like. And then because of work, I went to America. I saw what capitalism looked like. And then I came to Hong Kong, and that was capitalism unchecked. Like it was, it's a bit better now, but back then it was really, if you've been to Hong Kong, some people say like Dubai is like capitalism unchecked. No. I mean, Dubai has some controls. Like Dubai is more like Singapore because you have the top level Emirati who are basically governing, right? But Hong Kong was truly like like Milton Friedman's wet dream, as in it was, if you had money, you had power. It was a completely free and fair and open market, you could say, but also no social security, right? It was like the extreme side of capitalism. So I saw all these things, and I wouldn't know until much later in my life that it had an impact on me. Right? The reason why I'm so drawn to Web3 and to blockchain technology is because I'm a capitalist, so I believe in that. However, I also recognize that there's some problems in capitalism as it is today, not in the spirit of capitalism as a free market and fair market, but the fact that you have these monopolies and these controls. And so actually what blockchain does, it actually makes it more fair and transparent and makes everyone a potential owner in these networks. So that really drew me. But I would say if I didn't have that experience beyond my technology background, I don't think I would understand Web3 the way I understand it today, right? So the journey really began, when I was a child, but I didn't know what that would look like, right? And then, of course, in my work journey, the other thing is that, I also I'm an immigrant. I mean, I grew up in Austria, but, I don't look Austrian, right? And in the 70s and 80s, there were maybe 200 Chinese people in all of Austria. Okay, so I was definitely sort of a weird person. I didn't have any aggressive racism. It was just curious. It's kind of like when a blonde person goes to China. Back then, people would also say, "Oh, what's that?" Right? So it was kind of a similar situation for me, but the other way around. But it also gave me a view of what it was like, because my German is fluent. But it also gave me an impression of kind of being an outsider, but looking in, right? So you're kind of not really there, but you're there. I think today, because of immigration, because of travel, it's much more common to have, what we used to call third culture kids, right? So it doesn't really matter. But back then, it was kind of weird, right? And so I think that also gave me a different lens of the world. And I made a lot of friends in those days through a pre-online service called CompuServe, which is like a bulletin board system. It's like, it wasn't really internet as we know it today. And I made connections with people in America and in Asia and wherever those people were. And I remember CompuServe had maybe 200,000 people. That's it, 200,000 customers. And, I was one of them. And I would connect with people semi-real time because it was asynchronous, semi-real time, and send literally sort of early version of email. And I made connections and friendships and business that way. Now, this was in the 80s. And so that background sort of gave me a lens as to sort of where I thought the future would go. And I fell in love with it. And I've stayed in the industry since, started an early ISP in Hong Kong, worked for SGI, that of course no longer is around. So I also saw the evolution of Web 1 in the 90s, and then Web 2 in social media, and what happened with Apple and Facebook, and then of course now Web 3. So I have a little bit of the benefit of having seen sort of all these transitions, around digital literacy and internet. I mean, today nobody talks about digital literacy, right? However, back then, digital literacy was a term because most people were not digitally literate. I mean, can you imagine, right? And that basically helped me sort of get some perspectives around that. And so the way we approach Web3 for me has been a little bit like going back to the future kind of feeling, right? So why do we invest in so many companies in so many industries? Because frankly, if I was back in Web 1, if I had some money and some wisdom, I would have done the same thing. And I would have been much more successful because, I would have recognized that in the early stages, you have to basically sort of have a lot of bets and have a lot of companies you're building in. And also it's easier to find them because the concentration is much tighter. We got very famous because of our early investments in Axie Infinity and Sandbox, the acquisition, and OpenSea, and, like Bored Apes, the things that became under Dapper Labs, like NBA Top Shot, right? The things that became really, really big, in 21 and 22. Some people would like to say, "Oh, so how did you find these deals? Were you were you really smart?" Of course, we like to say we're very smart, but the reality is, when you're early in the industry, there's only so many of us, right? So when we there was a conference in Hong Kong, the very first NFT conference called Nifty, and that's when we also invested in Decentraland. And they were actually at at the Cyberport. It was a small event, like 200 people, right? I remember I was speaking. Maybe there's 20 people in the audience. Like nobody cared, right? This is 2018. And what was interesting was that all the companies I met there, I think we invested in almost every one of them. And for me, the reasoning was simple. Well, we believe in the vision of digital property rights, so we think it makes sense. Did we know that NFT gaming, which is what it used to be called, and sort of DeFi connected would be so big? No, we had no idea. But we did know that these people who were building something then, they didn't do it just for money, because there was no money in crypto in 2018 and 2019. Like zero money. Okay. Like Bitcoin was 3,000, Ethereum was like under 100. It was bad. Okay. So if you're still building, no, so we could be totally wrong, but if you're still building when the market is that bad, you're a believer. And I think that's and that was the same in the early days of the internet. Like everyone said, you're never going to replace a magazine. And why would you go to a crappy website? It's like today, like you use a wallet in MetaMask, you say, that's not very good. However, that's what we used to say about the website back in 1993 and 94. It was a terrible experience, right? But the people who kept building in that era, they were believers and they were passionate about it. And so if you can find those guys, I don't think you can go wrong if you, generally speaking, are doing sort of investing in a macro way. And that's what we did. And we went from a very small company listed in Australia to a multi-billion-dollar organization fairly quickly because of that. And I think if I did the same thing back in the 90s for Web 1, I think we would have had a similar outcome. And there was a company like that called SoftBank, for those of you who might remember, that did that. But they didn't do it the same way as we, because they were more like classical investors. They're not ecosystem builders. But, in my mind, because, SoftBank, incredible chip companies, of course, Yahoo and Alibaba, and, like incredible, right? But what they didn't do, what SoftBank didn't do is leverage its network for a cause. Yes, exactly. They traded. So I make a lot of money, I sell, right? And that's okay, right? However, they're not leveraging the asset base because that's not their DNA. Now imagine what SoftBank would have looked like if they actually leveraged what they invested in the early days, right? I think they would be much bigger. And in a way, if you look at Facebook and Microsoft and Google and Apple today, while they didn't invest, they're kind of examples of what that could have been like, right? And so I think we've styled ourselves a little bit around that. Sort of Animoca Brands is kind of the window, the gateway, essentially for Web3 and Web3 strategies. And of course, that means owning a lot of digital assets because that is what Web3 is about.
And when you look at the investments, right? So if you mentioned that you invest at the beginning, you invested in everything that was real. Nowadays, you have lots of different actors in the ecosystem. Not everyone is building it, for the good reasons. How do you guys choose the right companies to support?
Yeah. So first of all, like with anyone, you don't always get it right. Okay, right? It's the nature of risk, right? So, but as you end up sort of doing it more and more, you can get better at some signals. So there's some givens. So, are you capable? Are you smart? Do you have good reputation? These are obvious, right? These are pretty obvious, right? I won't go with the obvious ones, right? But the ones that are not obvious are more philosophical. So, for instance, we believe that you can't really build a monopoly in Web3, right? Because it's a permissionless network. And we also believe that you generally benefit building open and in a shared network, and we benefit from the shared network. That's a very important belief for us. Now, just because you're building in Web3 doesn't mean you agree with this belief, right? So there are companies in Web3 who will build for monopolies, for total domination, for absolute control, right? And the earliest example of this, if you might remember, were the L1s and some L2s who would call themselves Ethereum killers, right? And we decided very early on, we're not going to agree with that. We're multi-chain, right? We're multi-protocol. We work with everyone. And for a while, people were like, oh, you got to bet on your horse. And said, no, we don't think so, because in a permissionless network, that doesn't work. Now, imagine if you were building in a monopoly way, right? In that thinking, actually, you would have lost out today, right? And you can see the chains that don't have interoperability or don't have good bridges or not connected to wider networks don't do well. There is a reason why the successful L2s are connected to Ethereum as opposed to being competitors to Ethereum, right? So that's an important distinction, right? Because it means that you have to agree that you have to build open and permissionless, and you have to therefore cede control to the users as well. And that's not for everyone, right? And not everyone agrees with this philosophy, but for us, it's very important that companies we invest in sort of believe in that. Now, why is that also important for us particularly? Because we invest in so many companies. In Web3, I can see how we could have 10,000 portfolio companies, and they can still kind of work with each other very well because of the permissionless network. So we only have to make an introduction, but I don't need a special API. I don't need a contract or an agreement, right? I just build on your chain or your infrastructure, or I sell my product on your marketplace or whatever that is, because it's open and permissionless. I don't need special connections, so to speak, to do that. And we can facilitate that, right? Whereas, in the Web2 investment model, the synergy is much harder because, I have to sort of build a relationship between two companies who don't have a way to communicate. So you have to build an API, and then you have to have permission to the API, and you have to have all these special access. It's a lot of friction, right? And that's one of the reasons why blockchains grow so fast. I mean, a lot of people sort of don't appreciate that it's permissionless nature that allows it to grow and innovate because you don't have to talk to anyone about it. So that means with AI and with agents and with intermediaries, you can help facilitate a network effect between your portfolio much easier and much faster than you could do in any other old construct and paradigm in Web2, right? So you have to agree with that thinking, which also means that you kind of have to be a bit more generous. Now, what I mean by that, right? For instance, if you're a founder in the traditional sense in Web2, you start owning the company 100%, then you sell 10% of your equity, maybe 20% of the equity. Yeah, you have pref rights, so you get a little less, but the point is you start with total control, right? But in Web3, actually, you really give most of the control to your users. That's when you launch the token, right? If you look at the early token designs, it was very founder heavy. And now the token designs are much more sort of user heavy, and the founders get something
like 10% to the team.
Yeah, it's very unusual for the team to get like 50%. Okay, right? And it's just an example of when you see this, it's just an example of what do you prioritize? How are you working with your communities? What do you value? I don't think it's that different though from Web2 when you think about it though. For instance, like Amazon's motto is the customer is king, right? So he's always right. Okay. To me, that's not that different than saying I give 80% of the token supply to the community because they're my customer, right? So you have to kind of agree with that philosophy first before you can do it, right? So it's all these type of sort of frameworks and thinking that are important. So it's understanding that there's a shared network, that we believe in the permissionless network, that we believe in open, and of course in an on-chain future, right? So that's some of these important distinctions. It's more of a character distinction than just a sort of, are you a good programmer? Are you sort of super intelligent? I mean, these are all important too, but you could be very intelligent and you could, be also very corrupt, and that's not good. And we've seen lots of people like that too. So.
So in terms of like, you're not a typical investor, right? It's kind of you're not a fund. You're investing mostly from balance sheet, right?
That's right, from balance sheet, correct.
Yeah. And when you guys make an investment, do you have any strategic reason to invest in some company as a CVC?
Yes. So every investment we make is making an assumption of a strategic partnership of some sort. That doesn't mean it always happens, but we see a potential future. So, if we invested in a guild, it's because we thought they could help our game portfolios. If we invested in a DeFi platform, it's because maybe they can give, basically DeFi services to something. If we invested in L1, L2, it's because our portfolio could launch on them or so. So there's always a reason behind that. But maybe just to dial back a little bit, I actually think the role of the traditional VC is kind of going away. And in a way that's already changing, if you think about how democratic Web3 investing is, the VC special access is no longer quite so special as it used to be. Right? And I actually think beyond what we can offer, which is what VCs say they can do, and of course we can make introductions or whatever, but honestly, I don't think of it as the only sort of special sauce that I know someone, you know someone, or I know someone, you don't know someone. These days the world is so connected. I don't think that's what makes you special. What makes you special beyond your services is, for instance, in our case, the money that we make, do we give back to the community? And we say we do because we invest it back, right? And that's a big distinction. Because, if I'm going to work with a VC or a partner and take money, do I know that that money will go for good causes? Now, I don't mean, so for some people, it could be charity, right? Oh yeah, I give 10% to, I don't know, homeless people. But that could be one way, or I support sustainability. But I think the more obvious one to me is knowing that the money we make will invest in more companies that will bring more Web3 users into the ecosystem, which makes your business bigger because you have more customers and is a very positive flywheel, right? And I actually think that what we're doing is the future of investing, as in every company not just in Web3, but in the future, but certainly we see it in Web3. Every company and individual in Web3 is by definition an investor. Think about everyone in Web3, if they've made some money in tokens, they end up investing in other stuff, right? And it's putting money back into the ecosystem as opposed to extracting from the ecosystem. I also think it's more sustainable. I think it's a better form of capitalism because, the way that one used to distribute capital across was taxes, right? But taxes have come down a lot. Of people don't like to pay their taxes or high taxes. I get it, right? But then, eventually the money has to come from somewhere, right? And so what's more productive? Well, the more productive thing is we should use the money that we make and invest back into the ecosystem to make it bigger. Now, in a classic monopoly sense, that doesn't make sense because why would you invest in a company that could be bigger than you or could be a competitor, right? So it doesn't make sense. But in Web3, if you can't have a monopoly and it's permissionless, then it kind of makes sense to do that more often, right? Now, like Apple, which is, of course, first or second largest company in the world, depending which day you look at, right? If they took a small percentage of their cash and made an investment fund, an Apple investment fund into any app that any sort of someone developing on the App Store, you would have a much healthier, much bigger, much more vibrant ecosystem. And on top of it, people would be very happy to pay their 30% because they know that, yes, Apple takes 30%, but I also know that Apple is putting that money into growing more customers and giving back to the ecosystem and helping my community. It's why we pay taxes in society, right? I think very few people will say zero taxes because they know that the taxes go for government services, for benefits, for schooling, for education, whatever, right? So we're willing to pay for that because we know that that's the bargain we get. And we like a government that does a good job on this, right? And so that's the thing, right? So I think, for us, by us investing so aggressively back into the ecosystem, taking our profit and putting it back, we're not only building goodwill, we're making the ecosystem bigger. And if you work with us at Animoca, you know that whatever profit we make from you, we're going to invest in many more companies, which will help you because you get more customers or more growth or more opportunity. And that to me is, I think, how every company should think of. Like, imagine if every company, big and small, took 10% of their profit and made investments into startups. I mean, the world would be so different. And I think we'd all be much happier. And there wouldn't be this issue of, we would not be anti-capitalist. We would not be anti-entrepreneurial, right? We're very supportive, right? And by the way, some places have this. So Dubai has this, right? Everyone's kind of investing in each other. So you have a very, very entrepreneur-friendly environment because it's very common. It's actually quite uncommon not to find someone who's an investor, actually, right? But then you go to Germany or you go to, I grew up in Austria, right? And it's very rare to find anyone who invests in anything, even if they've made a lot of money. And the one place that really did that very well in the early days was Silicon Valley, right? Silicon Valley's secret isn't the best infrastructure or the best universities, because Europe has very good universities, okay, and it's also very diverse. What it has is a culture of investing, which is another way of giving back. Like every engineer that works at Google or at Apple also invests in companies, in small startups. My son had a startup during COVID in Palo Alto, and he got in front of really high profile people, and they raised a small round, $500,000, $1 million. I don't know, right? But the point is that, where else do you have that? And so if you have that environment, then it's very healthy. And I think that's something we have to have everywhere. And I think Web3 really promotes that too.
Yeah, I agree with you. And in terms of how do you guys manage your investment committee, or how do you choose? Kind of, again, it's always strategic, but let's run through the process.
Yeah, so we have an investment committee. Yeah, so first of all, we have this thing called Hey Annie. So that's our investment AI. So Hey Annie basically reviews stuff initially. That's the first funnel. And then we have an investment committee. And the investment committee is quite large, but it's a quick decision. But it's quite large because not everyone has to join. Because if it's like smaller check sizes below $1 million, it's essentially by consensus. You don't need everyone to agree. If it's a very large check size, then it goes to XCOM, which is basically myself and a number of very senior people who basically have to make a decision whether we want to invest. These are typically like, 10 million, 20 million, like very, very sort of much larger check sizes or acquisitions. Then obviously it goes at our level. But from a pure investment perspective, when you're doing seed checks or Series A checks, it can happen basically through our investment team. We have an investment committee that opens up to a lot of people who can join. And these meetings, we have like 21 people to 22 people that typically attend them. It sounds, but of course, after it's been vetted with our AI tools and with analysts and that kind of stuff, it doesn't mean we can get every deal done. Just to be clear, right? It's not perfect, but we have a pretty quick approach. And then, of course, we have a portfolio day where everyone kind of comes together. And also, we like to invest on theses that we like, right? So if you like gaming as a thesis, then of course we're going to focus on that a little bit more. Or if you like Deepin, which we've done a lot in as well, then we'll focus on that a little more as well. And we also have subject matter experts in those areas that we believe in as well.
How long does it take typically to make a decision from the moment you meet someone?
Well, it depends on the stage of the business, right? Because for instance, if it's very, very early stage, it's sometimes better to go through an accelerator. So for instance, in the UK, we have one with Coinbase and Founders Fund. In Asia, we have, the ones running together with Brink. So there's a variety of ones that we sort of help and support in these accelerators. But otherwise, let's say if the business has a certain kind of traction, a certain type of sort of maturity, we could do it within under a month. It depends on the check size again, right? If it's a smaller check size, it's faster. If it's a bigger check size, probably longer because it's more deliberations. But it also depends on how busy the pipeline can be. So bear markets is actually typically better time to invest because the deals not are just more reasonable, but also the quality tends to be higher because if you can survive the bear markets, and you've got something going. Whereas in a bull market, it's actually much more noise, and so it's actually harder to invest.
Yeah, I agree with that. When you invested, is it a super positive signal for other investors to invest? Because when you got like I see a lot of companies, they flash, hey, Animoca is on the cap table, you should join.
So I would say definitely a lot of people do want Animoca on the cap table because it's a signal. But I think the signal that you get with Animoca isn't specifically, it's an endorsement specifically of an investment. I think there's other investors like A16Z that I think have, frankly, sort of a stronger halo in terms of the investing side of things. I think knowing that Animoca is behind it means that you have the Animoca machine that can support you as well. Whether it's token launching, market making, advisory, the portfolio effect, right? That's kind of where real value comes in because unlike other investors, we're actually builder operators and we invest out of balance sheet. That's an important distinction because we have the ability to be long term and we have the ability to also do liquid as well. So for instance, when you're a fund, you are restricted. You're like, okay, I can only invest in Series A, Series B. I have concentration risk. I can't do liquid. So it's within a mandate and the mandate can be restrictive. And maybe in the Web2 world that works, but in Web3 that doesn't really work. So for instance, right now, we're doing quite a bit of liquid investing. So there's companies that we are supporting that already have a token on the market. And we like the product a lot, but it's been depressed because the last 6 to 9 months have been tough. And so we're like, okay, well, actually, how can we help you? And we can help you more by buying your token in the market and then supporting you that way and then doing a partnership than necessarily investing in you, for instance, right? And so I see that something that you can do when it's out of balance sheet. And so I would say we're very flexible as well versus, for instance, maybe traditional VCs who can't just because they're operating not out of their own balance sheet.
And you also mentioned that you do M&A. It's kind of when do you do M&As, or do you invest in some companies with strategic plan to acquire these companies at some point? Can you talk about this?
Yeah. So when we make investments, we don't typically take the lens of we do the investment so we can buy you. It's normally, if we want to buy you, we want to buy you. Okay, right. And these could be other very small companies. Like for instance, Sandbox. When we bought Sandbox, they were a $4 million revenue business, 25 people in Argentina. It was tiny, right? They didn't even have a blockchain yet, right? So I mean, they had a plan, but they didn't have blockchain. So it was totally early, right? And so that would be an example of something where you could say it made sense to us. And why did it make sense? Because it's Minecraft, it's a good team, and we like it. Of course, did we think Sandbox was going to be as big as it became? I think we all hoped it would be big, but I think, very few of us imagined that it could be that big, right? Back in the day, right? So that's an example of sort of, how prepared we are to swing for the fences. So you could say, we are quite moonshot-like in that category when it comes to making M&A. So our M&A strategies are typically based on things that we think have high conviction, high potential. That doesn't mean they all work, but it does mean that we believe strongly in where it could go and put its weight behind it. Because the value comes from buying something that obviously wasn't that valuable, and then we can turn it much more valuable, right? That's the reason you would do that, right? Or it's very complementary. And so another example of that was when we acquired TinyTap, which is an education platform, which became the foundation of Open Campus, which then launched EDU Chain and things like Pencil Finance on the student loan side. Stuff like that, started from one acquisition and then emerged into something larger and bigger, right? So there's a lot of areas like that we like to think of from an M&A standpoint. But the view is a bigger strategic outcome that we already identified. So it's not like, oh, let's invest in this and let's see if we can buy them later. That's not normally how we think of it. It can happen, but it's typically more like we like you, so we're going to buy you for this reason. It makes sense to put it together. Now, we were a lot more M&A heavy in the early days because there was very few companies building in Web3. So we had to acquire them to make sure that they were actually building in Web3. Today, there's so many more Web3 startups. So it's much easier to partner with them and work with them and publish them rather than to sort of buy them, right? So we also have to evolve with the market too.
Do you launch your own products as a venture studio?
Yeah, I mean, Mochaverse is a good example of our own launched one, with digital identity, being one key area, right? And digital reputation, and that to me is an example. Why do we launch it? Because we looked at the market and we said nobody's trying to solve digital reputation in this way, when in fact we thought it was one of the biggest problems. With airdrop bots, with fake identity, with all that kind of stuff that's happening that can prevent sort of Sybil attacks when it comes to, because just proving that you're human or doing KYC is not enough, right? You need to understand someone's reputation to do business with them. And so, because nobody else was doing this, we decided to basically incubate and build it ourselves. But then there's also other projects that emerge from within the ecosystems. So, for instance, one other project that we've incubated and essentially helped co-launch almost is Pencil Finance. But it started with education with EDU Chain, which was launched through Open Campus. And then we recognized that actually what's one of the biggest problems in education, it turns out to be student loans. And student loans is not a sexy topic. Like, when you talk to people in Web3, they're like, student loans? I just paid my student loans. I don't want to go back into that, right? Like, from their perspective, they're like, why should I go back to education? I just finished my school. Like, I want to do other stuff, right? However, student loans is a $3.3 trillion market. It's massive, right? And it's perfect for DeFi because DeFi can make it better, faster, cheaper. And then we looked around and said, who's trying to solve this? Nobody. Oh, okay. So you know what? Maybe we'll try and do it. Because in this scenario, if we can succeed in student loans, it sounds obvious if you think about the numbers, but it's moonshot-like. Because if we can take 10% of student loans and put them on chain, that's going to be already, it's $300 to $400 billion of a TVL. That would make it the biggest TVL in anything, right? So that's kind of the goal. And why do we do education? Why do we incubate essentially Open Campus? Because education is a $5 trillion market. But of course, it doesn't mean it's easy. It just means it's something that is worth pursuing, right? When you look at gaming, our thesis on gaming was quite public, which was we believed that gaming was the easiest way for people to move from Web 2 to Web 3. And in some extent, I would say that was true. For on-chain activity, gaming has the highest number of daily active users, right? Token price aside, the activity for gaming is actually the highest. So it has succeeded in this element, and I think it's bringing more people on there. And so that vision proved out. Of course, when we made these investments, and this is where people sometimes go like, oh, look at the token prices of gaming. All the gaming tokens together are still about $20 billion. That's still money, okay, right? And people forget that in 2018 up until 2020, these gaming token projects had zero value or zero market cap. I think when Sand listed on Binance, I think it listed at $10 million market cap in 2020. And I think Axie Infinity was maybe 15 or 20 million, whatever. Those were the ranges, right? And, when that happened, we were like, yay, this is great. We're moving on, right? And so the acceleration of what took place, I think it's just an indication of where the market could go and eventually will go again. It's just to point out that, we were building on a conviction. When we started doing Web3 gaming and NFTs in 2017, late 2017, nobody was looking at NFTs, right? And it was like, what is this, right? Why should we even look at this, right? And I remember the biggest haters of NFTs were not people outside of crypto. It was people inside of crypto. They're like, who wants a non-fungible token? I can just copy paste. I'm just going to sort of, have fungible tokens. And while the hype of NFTs has gone, NFT sales is still about $500 million a month. It's just distributed over many more chains today, right? So again, it shows that you have to have some conviction in something. And again, we don't always get it right, but the point is that when we do see something, we do want to focus on it, and we'll bet on it, right or wrong. And fortunately, we've been more right than wrong, so we're still around.
You have multiple metaverses. What is your prediction on the future for metaverses? Will there be mass adoption for metaverses?
Yeah. So when we describe the metaverse as in the open metaverse, we connect it very much to what's happening in Web3 because we think of it as our virtual existence. So we don't say that the metaverse is just a land and sandbox or wearing virtual goggles. Like that's not to us what the metaverse means. The metaverse for us is essentially us making money, having a virtual existence, having meaning and purpose essentially through our digital lives that actually we belong, right? And so that means as a foundation, you need to have property rights. And the reason why something like Mocha ID is so important is that what is the very first property that you need to own? And that is your own, as in your own name, right? That is the first property. Like the fact that you get to own your own name in real life is the foundation of everything. And what is the foundation of the property you own? It's your reputation. And I think, that's the reason why ID is important. That's the reason why NFTs are important. And for us, that's basically what it means to be in the metaverse. And so today, that means from an on-chain sort of perspective, there's probably about 40, 50, maybe more million people that are doing on-chain stuff. And we think of that as the metaverse, the true open metaverse community. There's about 500 million people that own crypto worldwide, but they own them in exchanges and they trade. So to me, that's not really the metaverse. And that's not saying that they're not dealing with assets from the metaverse, as in it's crypto, so obviously it's virtual. But it's the fact that they're using a Web2 platform to deal with Web3 assets, right? There's nothing decentralized and ownership based around Coinbase. Yes, it's your crypto, you could say. But if Coinbase has a problem, then your crypto is gone too, right? So it's not yours, right? It's still a centralized platform. Whereas when it's on DeFi, it's a fully centralized, decentralized ecosystem, which you have sovereignty over and that you own. And that's what we mean by the open metaverse, because that's when the opportunities come to you as a result of that. So that's how we think of it. And we think it's inevitable. We think that, once we reach several hundred million on-chain users, that's when escape velocity will happen. And we do still believe that gaming is the best way to get there, because gamers are more naturally sort of attuned to this idea, particularly in Asia. Like when you think of interface design, one of the things that worked really well for Apple, they had this sort of principle around skeuomorphic design, right? And skeuomorphic, if you remember the old Apple, when you flipped the page, when you scrolled, it felt like you flipped a page in a book. It's gone now. But in the early days, they had these kind of weird things. If you look at the phone handle to make a call, it looks like an old sort of calling thing, right? My kids would be like, "What is this? I don't know what this is," right? But people like us, we would remember that, and so you instantly know from a design what that looks like. And so for gaming, the virtual currency and the NFT aspect is already in the game already, abstracted this way. So it's very easy to translate that. So we think that's sort of the natural onboarder. But eventually in the future, we won't need that anymore, as we're all going to be just living in the metaverse in one form or the other.
And let's talk about AI, right? It's kind of AI is disrupting everything right now. Where do you see AI being utilized in the Web3 and how it will create mass adoption for Web3?
Well, so first of all, AI is ubiquitous, right? And just to be clear, I don't think we can talk about an AI company because everything's AI, right? It's kind of like saying, "Hey, you're an internet company." That doesn't make sense either, right? You're either in the internet or you're not. So it's all sort of embedded. Now, why is AI so particularly important with crypto and the Web3 space? Is because crypto is a natural currency and a natural property of an AI agent or AI in general, right? And it's not just AI trading with each other in different forms of currencies, which are all going to be crypto. It's the fact that an AI agent can also make its own crypto, and that is power. So a lot of people sort of don't appreciate, I think, who are not in Web3, don't appreciate that the fact that an agent can now, like an autonomous AI agent, can make its own currency or make its own NFT, right? Gives it true agency, because that means it actually has something of value which you might want to have. And that means an AI has true power, right? Because money is a source of power. And when you think about people launch meme coins and say, "Oh, yes, it's trading, it's fun, whatever." But actually, they are sources of power. Whoever has those meme coins have some form of power. It could be big, it could be small, it could be whatever, right? But the point is that there's forms of power. And so we will go and change from a world where AI agents really serve us to actually a world where we may serve AI agents, right? So now that sounds a little scary, but I don't think it's that scary, because in a way we're already working for protocols. We're already working for, my lens is that when we share a photo on Instagram, we work for Facebook, because we're basically giving them data and we don't get paid for it. So honestly, what's the difference, right? And they're nameless. It's not like I think I'm working for Mark Zuckerberg. I just don't even know what's going on, and I'm basically just doing that, right? Whereas an AI agent will at least give you credit for it. and they will attract you, and it will be a real market, and say, you know what, use my platform, and I'm going to pay you some tokens, or I'm going to do something for you, right? So I think this is going to really accelerate. Of course, we also believe that everyone is going to have their own AI agents 24/7. And of course, they're going to get their own wallets, and they're going to be trading for you or buying stuff for you. And how to do it? Again, through crypto, right? So it's so embedded. Now, what does it mean for us as people, though? For us as people, we cannot compete with an AI in terms of speed, execution, trading. It's not possible, right? We can code it and tweak it and give it intention, but we cannot compete with it. It's like competing with a calculator and saying, I can do math faster than you. Good luck. Okay. Maybe 0.00001% can do it. Most of us cannot do it. That's not how we're attuned and how we're designed, right? So what is the asset class, therefore, that the regular person can own if you believe the future will be, completely driven by AI? And to us, it has to be blockchain-based assets. It has to be digital assets because there's nothing else that matters. And if you think AI will be very powerful, then what is the property that will be powerful? It has to be digital, right? And it's not that different from, back in the days of, when we had civilization. First we were nomadic people, so the value of the land wasn't that valuable because we just kept moving around, right? But then when we had civilization, we had a base, and with that base, basically, who owned the base had power, right? So real estate became powerful, right? And who are some of the most powerful people in the world? The people who own our land, right? So who own, and what is that next type of land? And that's basically digital property. But digital property rights, to be specific, right? Whether it's NFTs and tokens and so forth, right? And that's why it's so important that if you want to it's not just you using AI as a tool. It's if you want to basically survive in the future of AI, then you must have digital assets because that's your hedge. To me, that's your AI hedge to your life, so to speak.
So let's talk about your lifestyle, right? It's kind of how do you work balance, life balance? Because we see you as a speaker in most of the crypto conferences, right? So you travel a lot. You also need to make investment decisions, corporate decisions. How do you manage it all?
Well, I mean, first of all, I have a great team. So it's impossible to do everything myself. And I think, you have to empower people to do stuff. And sometimes they make decisions that maybe you don't always agree with, but that's okay. Because, if you don't let them do their own thing sometimes, then you're really not empowering them, right? So there's this aspect. So of course, build a great team. But in terms of my own lifestyle, I try to keep reasonably fit if I can. So I work out every morning. I don't go crazy, but I, just making sure that I maintain a reasonably good lifestyle. I think the second thing is, so a lot of people say sleep. So I'm probably guilty of not sleeping much at all. But I feel like for me, it doesn't take away my energy because I'm too excited about what's happening. So I do go to bed fairly late and I get up fairly early, which most people will tell you is not a good thing. I probably would technically agree with them, but it hasn't affected me. I'm not saying do what I do, but on average, I sleep about 4 hours a day, and then I can't sleep longer. Right. So that's just how I'm currently wired. But I would say the other thing I also do a lot is I read a lot. I do a lot of, I listen to a lot of things. So that are not necessarily only related to crypto or to finance, right? So there's a lot of philosophy. It's a lot of new ideas. There's also medicine. And like these things, I think enrich you, and then you help connect you to dots with other things. And I try to pack things in as efficiently as I can. So, for instance, when I'm working out at the gym, I'm listening to podcasts. Some people listen to music, and that's great too to motivate you. But I like listening to podcasts because I get some more information, I get some more insights, right? And then I try to go deeper. I also write a lot. Now, that doesn't mean I post it. I would say 99% of everything I've written never is posted, right?
So for yourself.
Yeah, well, I mean, it's an idea, right? And so when there's an inspiration and an idea, you just start writing it. But you're not sure whether this is an idea you should share because it's kooky or it's weird, right? Or I don't really fully understand it, right? But it's a thought, right? So probably have, I don't know how many thousand unfinished mini manuscripts of sort of ideas. And if I look back at some of my early ones, I might go, holy shit, that was such garbage. What was I thinking, right? But the process of writing actually, I think for our mind is like cleaning, right? It's like cleaning your thoughts. And I think it's an important skill that, we shouldn't lose. Just because ChatGPT can write for you doesn't mean that you shouldn't do it yourself, because something happens to you when you do that, right? It's like when you read your own writing.
Do you write with a pen or you type?
No. I write. Yeah, so I write on the computer. My handwriting has gotten worse over time because of the keyboard.
Yeah, we forget how to use the pen.
Yes, exactly. Yeah. So the only time I use a pen is to probably do signature for some contract or something. But yes, yeah. But I think these things are important. Really, it all boils down to sort of keeping a very strong sort of reasonably fit body, healthy mind, all that stuff. The other thing, of course, is that as you get older, that means I have to do a lot of supplements. So I do take vitamins and that kind of stuff. I used to not do that stuff because I was like, live naturally. But now you come to realize and say, what? But it's like you have these resources. It's not unnatural. Just take your damn vitamins and live a healthier, better life, right? So those are some of the sort of little things that I do.
So my wife and ChatGPT, they drive my supplements, and so I just get the pills.
Well, I mean, things like blood tests and so on are quite helpful as well, right? Because if you have a blood test, you can see what you need, what you don't need. And so I used to, not like the idea of getting regular checkups. Of course, nobody wants to do it, but in a way, you have to. And now it's become kind of normal as well to do it, right? So it's all kind of sort of correlated to, self care. Like we're an engine. It's like we have our own things that we need to maintain. If we don't maintain it, then eventually it will break down.
And in terms of longevity, how do you see longevity panning out in the future, or how you can extend your life apart from the balance that you mentioned?
So first, I'm not the kind of person who believes we should live forever. That's not my personal philosophy. And I'm also not the kind of person who thinks that sort of everything ends, everything ends just because you pass away. But at the same time, I'm not sure I know or believe in sort of like an afterlife. But if you look at, for instance, sort of the laws of physics, right? We're all forms of energy. So at the end of the day, even when you pass, your energy passes somewhere, right? So you're not gone, right? So there's something interesting around. I don't take this view of sort of finality, and neither do I take the view of we have to live forever in this particular shape or form because I think that's unnatural. There's a reason why there's a setup for that evolution. So then to the path of sort of so-called longevity. I think longevity to me is really around whether you think you have a life in which the purpose and the impact is still important and relevant. More importantly to you than maybe even to others around you. I've seen this in real life. Since I'm a little older, I have a lot of friends around me who are actually a little bit older too. And when they retire, they get old very fast. What surprised me was that everything starts to slow down. And I think it has a lot to do with the fact that they lost their purpose.
They lose energy.
That's right. That's right. So you have to have your purpose.
Yeah, it's a very important insight. Many people think that when they retire, life starts because they worked, they earned, and then they start their life. So let's wrap up. Thank you very much, Yad, for joining us today. You shared lots of amazing insights, and I hope to see you at one of our events soon. We're probably gonna meet each other at Token 2049 in Singapore or earlier. Will you be at Ethereum CC in Cannes?
I don't think I'll be at Ethereum CC this time, but I'll probably see you at Token 2049 for sure.
Exactly. Yeah, so thanks a lot. It was very insightful, and let's collaborate. Let's stay in touch and co-invest as well.
Yes, thank you so much. Thank you so much.
Thank you.